So look, I think the Chancellor has a little bit of wiggle room today, but if you look at borrowing this year, everyone's made a big deal about the fact that actually borrowing is going to be £30 billion less this year than it was last year. It's still going to be 150 billion, which by historic standards is massive, and so all we're doing really is adding a little bit less to our debt than we were before. But I think the Chancellor does have a little bit of wiggle room, and ultimately, given the scale of the hit that people are about to face, households are about to face, which really is biggest squeeze on income in 50 years. I think the Chancellor is under huge pressure politically and economically today to deliver quite a generous package of support, and I'm sure that's what we'll see.
As you mentioned there has been a lot of focus on this borrowing figure, which hit yesterday, and it came in, as people are saying, a bit lower. We're borrowing less, but coming off such a crazy base, if you like, given how much spending had to get us out of the COVID pandemic. In terms of servicing that debt, though, some are saying the government is going to spend more on servicing that debt than on schools this year, something like 11% of the government budget.
Yeah, and it's rising very, very fast. Debt interest payments are now the fastest rising bit of government expenditure, and everyone said for a very long time, don't worry, interest rates are going to stay low forever, and it now looks as though they may not. As you say, some of that is offset by higher tax receipts, but that ultimately just means that the tax rises the Chancellor announced last year, we're all going to be paying even more than we thought we were. And then the other pressure, of course, on the public finances as well is that all the spending totals are set in cash. So that higher inflation is just eroding away those cash totals, and I think the Chancellor's probably going to have to revisit some of those in due course as well. So there is some favourable news for the Chancellor, but the interest payments and the spending issues I think are very significant challenges for him medium term.
And before we get onto the inflation piece, just want to focus on the politics there for a moment, because McFadden, obviously Labour, talking about it being a cynical ploy by the Conservatives to basically cut taxes to be in favour with the electorate. But how does that chime with a national insurance contribution rise?
Well, exactly. I mean, I think it's a pretty odd line for Labour to take. The Chancellor announced, and I don't think he'd sort of thank me for saying this, but we had sort of the biggest tax rises in 30 years announced over the course of last year by the Chancellor. I think what we might see today is him giving some of it back. Now, the question is, how does he do that? Labour's proposal is to reverse and not go ahead with the NHS and social care levy. Now, the overwhelming benefits of that go to the richest 25% of households. It sounds like what the Chancellor is going to do is raise the level at which you start paying national insurance. That is much better targeted at lower and income families. So it's a slightly odd position for Labour to take, essentially asking the Chancellor to deliver a tax cut overwhelmingly aimed at the richest.
And lower income families, that's going to be the focus very much of today's spring statement. Inflation at absolutely soaring levels, 6.2% for CPI, even higher for RPI at the moment. What is your read on inflation at the moment, how far it could go?
Yeah, and I think that's a really, really big concern for the Chancellor. And I think in the back of his mind, or the front of his mind, the back of his mind, previous Chancellors, when faced with a big cost of living crunch, have tended to say, OK, what I need to do is I need to try and support and help people. And they've announced a big fiscal giveaway. I think Anthony Barber in 1973, slightly different circumstances, but Lawson in the late 80s. And what they ultimately did is just add fuel to that inflationary fire and made things even worse on the inflation front. So I think the Chancellor's a different set of circumstances now. You have an independent Bank of England, and ultimately they should, if the Chancellor does that, just increase interest rates even faster. But there is that question in the back of the Chancellor's mind is, do I risk overdoing it here? So he does need to balance things.